Hello everyone, this is Juan Sarmiento and today is Friday, February the 3rd. Let's look first at our current candidates and see if anything needs changing. I have organized them alphabetically so I don't miss anything. Let's start with Adobe. They have earnings to report here on March the 15th, so there's plenty of time. Let's look at the Analyze tab here. Great, we have a good move over there, and you can see that despite the drop today, it has been moving quite strongly. This is a weekly chart. Let's take a look at a daily chart. I think that this is a moment to take profit. It would have been nice to be on this day, but this is just as good. Okay, where we take profits, and how do we do that? Neutralizing our delta. Our delta is 20 deltas, which means $20 a share. Do we want to reduce that? Well, the way we do that is you can see that we have one outstanding call. What I mean by that is that we have two long calls and one short call. Difference, one. That one is the outstanding call. And we can roll it up, just one of them. That means that I'm selling the April 350 call and buying something at a higher strike price, and because we are here at 374, we can buy 375 or 370. Let's put 375, and all we need to do is change now the expiration, keep the same expiration as the roll up, and here it is. And now your deltas are reduced to 6. That's great, because if this stock begins to drop, then you took your profits. And I'm collecting 17.17 per share, and because there are 100 shares on each option, that means $1,700 in 17 cents collected, and my deltas drop from 20 something to 6 something. Okay, let's do that, and we wait. It should get filled very shortly, and that's how we collect capital. Let's go to COF. We did this last week, I believe. It's a good idea to copy your trade. This is what we currently have. Oh, look, we have, even though it hasn't moved much, we have accumulated good profits, $900. Let's go to the monitor tab and look for our original trade. You can go back, click here on the monitor tab, account statement, and look back 3 weeks, 4 weeks, 1 week, something like that, depending on when you filled it. And here it is, filled. Order history or trade history is better, and then you say analyze that trade, and you can keep it there for future reference. And this is the same trade, but you can, as we go, you can correct this number here by when you do your rollovers. This position would change, and we would adjust the debit here, which is the cost. Meanwhile, you can say analyze opposite trade, and that tells you what we could get for that right now, and we will get $891 if we were to close that position. I see February here is my shorts, and we have plenty of time before that. Okay, 14 days. So next week we will take care of any adjustments that we might need to make. Let's go to CRM. CRM, okay, again, just like that Adobe, look how it has moved above the smiley face. So that's a sort of a reference point in which you can do one of two things. You can sell one of the calls, because we have two outstanding calls. Again, the long calls 4 minus 2 short calls, that makes 2 outstanding calls. You can sell the 2 of them, which will leave you a very bearish trade, or you can close one. Sell just one of them, and that will give you with 3 long calls in 1 short call. Still very negative, so I can't really do that. It's easy to do when you have larger positions, like 10 calls in each way. So what I'm going to do now is simply roll it up. Analyze rolling. Okay, and once again, what we do with that, we are going to do only the two of them, and we're going to change the price of my long from 150 to something more natural. 175 could be good. 175. All right, that will give us a credit, but look, this June needs to change to match the May. Let's change it to May. Okay, so that the one you're closing and the one you're opening have the same expiration. And now I see that it turns negative. I don't want it negative. I want it slightly positive. So let's do only one of them. Perfect. That gives me 16.8 16.8 deltas. Imagine if the stock collapses. Well, even though we are negative, the Vega, the volatility will increase, and that will give us pay us up on the Vega side, even though the delta will work against us. Okay. If the market continues to go higher, provided that the Vega doesn't change much, the volatility doesn't change much, we could continue to make delta profits. Okay. Let's send that off and continue. This is how we take profits, and the capital that is freed in this way allows us to enter new trades. Let's go to Cisco now. And Cisco, we have 17. That means 17 longs and 10. I have already made quite a few adjustments, but again, we have the trade is above the smiley face, so I can sell a call. You have plenty of calls, long calls, outstanding calls. We have 7. We can sell one of them. Just sell one to sort of reduce my deltas. That's negative, so I can't really do that. Okay, can't really do that because I don't want it negative. Let me take a look. No, I think the stock could continue higher, but what I could do is do a rollover, at least one of them. Analyze rolling. Okay, just sell one, close one of your long calls. Here the negative, and here we're going to do what we're going to do is raise it to 50. Just do one of them. Okay, to begin with, same expiration. Uh, 341 sounds good, and my delta is still a little high. Okay, so I can sell another one. Roll 2. Yeah, 15 sounds good. Okay, so let's recover some money on that one too. 341. So as you can see, I'm not making any considerations of whether the stock will continue to go higher or lower. I don't care. We need to take our profits. We collect it, and that's why we spend time putting puts and calls, not just one-sided. It's not a one-sided trade, and we don't want to alter that. Let's go to Gilead. Oh, look at that. It has also exceeded, and we have calls 13 long, 9 short, so we can sell one call. And if we do that, oh great, because our deltas are quite large, you see, so I can sell 2, and that will leave us with how many outstanding? Well, it goes from 13 to 11. Okay, okay, we can do that, or we can do a rollover too. Okay, if we were to do 3, that would be too much, so we can do 2. We don't want the deltas to be negative, but I still think these deltas are large. So how about if we did just a roll up? We have 4 outstanding calls. Okay, so let's go analyze rolling. And not 13, we're going to do just 4. Okay, and we need to raise our price to 85. And same expiration, February the 17th. Great, it's still too high, so All right. How about we say customize and change this from 4 to 3? That turns 46, 43. If we did 2, that's negative. So I'm going to do this like this. I'm selling my 480 calls and I'm leaving 3 of the 85 calls. That sounds great. Okay, 39, that's a delta, should be pretty low, but still quite. And my smiley face is right in there, so it's quite neutral. Okay, let's go do that. And how much am I going to get? $1,539 in credit. All right, let's move on to GS. That was the Gilead. Okay, here is a little complicated, but I can see that we have one of every one. Okay, that means when the market was down, we roll it down, roll down my long puts from 350 to 340. When the market was up, we rolled it up from 350 to 370. So we leave the 35 calls alone because we have one long call, short call, so they cancel each other. So we only have this long call here outstanding, and at this point I could raise it up if I wanted, but my deltas is 9 and that's fine. Okay, I probably did that recently, raised it up. Let's take a look at the chart. Yeah, it's going to go to new highs. I need short-term highs, I guess. So that's good. Meaning I'm considering this the previous high, and this is my target, and it's hitting that resistance right there. But it looks like it's gonna get through. All right. All right. GS over and done with. Let's proceed. Yeah, I did this on January 13th, rolled it up, so I'm not gonna change that anymore. It's fine now, and we are here at the smiley face. A stronger move about 380, then we would change my 370 to 380. Let's move to STX. Cancel that, and looks good. $224. This is a fairly new trade, so I must have entered it last week. Let's go to the monitor tab. Here it is. You can copy that, analyze trade, and it comes over here, and then you say analyze the opposite, and it tells you what the value of the position is. And we have a little few cents here and there, okay, but they add up because we have so many of them, and that's what it looks like. Okay, let's go to TSM. Show it all. Okay, this is below the smiley face, so a little pull back to the cone here will be fine. It doesn't scare me. But if it goes over the smiley face, then I think, well, you need to take your profits, because what if you were here and then now you're here? Well, you missed that opportunity. So always when you see it above the smiley face, that's when you can say time to sell a call or roll it up or whatever. Okay, good. All right, I have two candidates to consider. One is AXP. Let's go to the monitor tab, analyze tab rather, AXP. And this is a banking, is American Express. Okay, first let's calculate. It looks like okay, we need to take a look, but let's take a look at the chart first. Okay, it's going strongly higher. You can see that it gapped up after earnings. The earnings came at 207 from 21. Okay, 2.18. That's not a good. We want the actual to be much larger than the estimate. And we can tell that the earnings were on the 27th. Scroll back and see if you can tell the reason why it says that the earnings came short of expectations. So how come the stock went higher, up over 9 point, on track to the largest percent increase since 2020. Yeah, but it doesn't tell you why. Uh, it doesn't really tell you anything. It says revenues increase. Okay, the revenues increase might be a good reason, but you need to know by how much. Okay, uh, again, it should be a good 10% or so of earnings, of revenues increase, since the earnings didn't make it. There has to be an explanation, and usually is looking forward, the company is raising expectations. That I don't see that, not immediately, but I will look carefully for it. And revenue increases, and they would raise dividends by 15%. That's not a good reason. Okay, here it is. American Express said it expects 11 to 11.4. Analysts were expecting 10.36. So that's more than 10% increase in revenue projections, and that is good enough. Okay, that's a good reason for the stock to go up, and a good reason to enter one of my trades. So let's go to the Analyze tab. This is the proposed trade, and here we look at the volatility here in the bottom right corner and use the calculator. Okay, let's clear this up, and we're going to average the two long calls. I mean the two long options, meaning the puts and the calls. Okay, so 29.68 plus 22.32, and divide that by 2, and thus the average is 26. Okay, now the short options, let's save this into memory. Meanwhile, we say 26.05 plus 22.45 divided by 2, and subtract from the memory and recall the memory, and it's 1.75. If this number was 3% or more, we wouldn't do the trade. Fine. As far as I'm concerned, this is a good number. Okay, now we look at go to the trade tab and scroll down and look for, this has to be AXP here, and look for the current IV percentile 1%. That means the volatility is really low. So entering a new trade, you should not be afraid that the volatility would go further down. It's already at the 0 level, 1% level. It's not going to go much lower, is it? Okay, so I like that. And finally, we create the trade, create duplicate order, and this gives you the mid versus natural. And again, we use the calculator. And how do we use this? Well, mid, you see the down here, mid is 35.95 minus 35.1, difference is 0.85. Divide that by 35.95, and that gives you times 100, 2%. Less than 3% is fine. Okay, so that means it's liquid enough. Good. And so we're ready to enter this trade. The only thing we need to calculate now is what is our net liquid value. Is 100,000 in this account. So what am I going to do? Well, I'm going to adjust my trade to be sure that it's no more than 10% of my account. Create duplicate, confirm and send, and then here you see that is 10,000. Okay, and 10,000 is 10% 100,000, but we are not quite there yet. So you may adjust if you want. I think I'm going to adjust it, okay? How? Well, let's put it 4, 4, 2, 2. Okay? You might enter and say, well, 10,000 is okay, but I'm not going to um, put too much load on one single stock. So this would probably will probably be all right. It's 7,000. Oh, I'm happy with that. Send it off and wait until it's filled. And the other one that I'm considering is Apple, which reported earnings today, yesterday, and at first they went down, but now it's going up. Okay, so we're going to look at it the same way. They came short of expectations, not by much, but usually you would see some kind of explanation for it. Right, target raised. Okay, so somebody thinks that Apple is doing great even though they missed. Okay. It reiterates a buy. All this is people coming and defending the stock. But I want to see more than that. I don't take the analysts too seriously. Okay, we just got the AXP trade filled. Okay, why is Apple going up? Maintain its, yeah, obviously the analysts think that that's a great stock. They all want to keep a positive outlook on it. I really don't see why Apple. See, he's here. Apple drops and whatnot. This is the real news here. Shares fall because they miss estimates. Okay, so why is it still going up? Because a bunch of analysts say they keep a buy on it. You see, Apple analysts say rare first quarter miss should not deter you from owning a share, owning shares. Well, I beg to disagree, but it's not my point to argue one way or another. Why? Because if the stock goes up or down, provided it does it in a strong way, I benefit if I have a trade. But I don't really see any weak iPhone shares. Well, okay, so all very negative. Um, it doesn't necessarily mean I wouldn't make the trade because the evidence is here. The price came down and then bounced back up immediately. So that's a minus, okay? That's a minus on my trade because I didn't see really any reason for the stock to go up. Then you have the other than analyst, and I tend to ignore that, okay? That's my rule here. Okay, let's look at the volatility. And the way we do it, we add it up, the two longs, divided by 2, and we're going to clear and add this. And if you recall, yeah, that's the number, okay? And then we take a look at the shorts. 28.26, 25.71 divided by 2 and subtract from the memory and recall the memory, and it's less than 3%. Okay, let's look at the show paper. In fact, you see here the average short is less than the average long. Okay, but still less than 2%, so that's good. Let's look at the trade tab. Go to the trade tab and scroll down, and current IV percentile 25%. Okay, the volatility is still falling. Okay, so, and it's yellow, so I'm gonna avoid this. Really, it's a very good, potentially a good trade, but it's got that stop and two positives and two negatives. I think if we create duplicate order, we'd see the mid versus natural is very, very small. Okay, so the volatility is still declining, and the stock didn't beat expectations. It came short of expectations, and all we have to go on is the analyst word. Okay, so yeah, the stock is up 10%, not quite 10%. It's up quite a bit since the low here, so that's good, but yeah, the volatility is not helping, so we could reconsider this next week. All right, we're gonna do that. Okay, that's all for today. Let me check my trades here. Okay, I could modify this. And I'm going to make sure that these get filled. The Cisco got filled, so all I have now is the Adobe. It should get filled shortly. That's all. Thank you very much for joining me. See you next time. Bye-bye.